Hello traders, Rich here, and here's a quick but detailed update on NZDUSD. As usual, if you like video analysis, let me know in the comments or simply leave a like. So let's get started. As we clearly see, NZDUSD has been stuck inside this range between our green support and blue resistance, and since we are approaching a support zone, we'll be looking for buy setups on lower time frames. Of course, we don't buy blindly no matter how strong a support is, because price can still dive inside it or even break it downward. We always zoom into lower time frames and wait for the bulls to take over. On H4 time frame, we can see an inverse head and shoulders pattern in the making. Of course, for it to get activated and for the bulls to take over, we need to see a break above the previous major high, which would be also the neckline of the inverse head and shoulders. In this case, it would be a medium term bullish movement. You can buy here, stop loss, and so on. But on a lower time frame, since we are diving inside the support, especially if you approach this demand zone inside the big support from daily, we'll be zooming into lower time frames, for example to M30, and look for a shorter term buy setup. For example, we've got this falling channel and I'm waiting for a break above this previous high to go for a long position, to go for a buy. Of course, the stop loss would be below the previous low, and we target a 1 to 2 risk to reward ratio to have an edge over the market. And the best setup or case scenario would be, if we keep on trading lower, dive around this demand zone, also providing us with a better entry. In this case, of course, I'll be updating my zone. For example, it would be like this around this new major high, and then I'll be buying on break upward. Of course, for now we are bearish trading inside the zone as we approach this area, but we are waiting for the bulls to take over to go for a buy. Before we continue, I want to tell you about Tickmill. Tickmill is established in 2014 and is one of the leading Forex and CFD brokers with registered users from more than 200 different countries. Tickmill is a no-dealing desk and ECN broker regulated in many countries like the UK, Cyprus, and recently in South Africa. With Tickmill, you can trade a wide range of instruments, starting from Forex to indices, commodities, and even crypto. Most importantly, with very low spreads and trading fees. If you don't have an account yet, make sure to create one using my referral link in the description below to benefit from 5% discounts on your trading fees. And let's continue. As we clearly see, Euro AUD has been overall bearish, making lower lows and lower highs, trading inside this big falling broadening wedge. And we were previously in a big correction phase, making higher lows and higher highs, and we are now approaching this upper bound of this falling broadening wedge. That's why we'll be looking for sell setups on lower time frames, of course, unless we break it upward in an aggressive manner. In this case, the bulls would remain in control, and this correction would become an impulse, and we'll be looking for buy setups on the retest to catch the next impulse. For now, let's take it step by step. Overall bearish, approaching a resistance. Let's zoom into lower time frames and look for sell setups. If you zoom into H4 time frame, we know that we are bullish, and this last impulse is engulfed by this rising broadening wedge in orange, and we are also approaching the upper bound, which I consider an overbought zone. Also, you can consider it as a non-horizontal resistance. That's why I'm be looking for a bearish movement as a correction, bearish movement, and of course for the bears to take over here from a medium term perspective, we need to see a break below this rising broadening wedge. But for now, again and again, let's take it step by step. We are looking for that setups as long as Euro AUD is inside this resistance and approaching this upper bound of the rising broadening wedge. If you zoom into M30 time frame, we can see that we've got this trend line that price has been trading above lately, and for the bears to take over, I'll be waiting for something like this, like a new swing low to form around the lower trend line and then breaking below it. In this case, I'll be going for a sell position for a short. The stop loss would be above the previous swing high, and we target a 1 to 2 risk to reward ratio to have an edge over the market from a risk management perspective, which would be around this lower trend line, as we can see in orange from H4 time frame. Of course, meanwhile, until the sun is activated, Euro AUD can still trade higher and higher, form new lows before breaking it down. In this case, we'll be updating the analysis. Best of luck, and I'll see you hopefully on the next one.